In this video, I'm going over the best dividend stocks to buy right now. I'll also show you what analysts are saying about these stocks, as well as where they could be valued at in the future. And stick around till the end of the video for a bonus stock. Hi, I'm Jeremy Zargami and welcome to my channel. Today, I'm going over the best dividend paying stocks to buy right now. If you haven't already, click that like button because the way the YouTube algorithm works, unless you hit that like button, YouTube will show this video to less people. So to help out this channel and to help more people see this great content, hit that like button down below. And if you're a beginner investor, don't forget to subscribe. This channel is all about helping out new investors and guiding them along on their journey of growing their wealth. So be sure to subscribe and hit that notification bell so you can see every time I post a new video. And don't forget your 5 free stocks. 4 free stocks when you sign up with Webull and deposit $100 onto the platform, with those stocks potentially valued up to $3,700. And 1 free stock when you sign up with Robinhood. Links in the description below. Let's get into it. If you're new to the stock investing game, some stocks pay out what's called a dividend. This is like a little thank you from that company to us for buying and holding onto their stock. The more stocks you hold in a particular company, the more dividends they'll pay you. And each company pays out different amounts based on a lot of different factors. For example, if I buy 1 share of a company at $100 per share, and that company pays out a 3% dividend, I will make $3 a year holding onto that stock, which is not including gains if that stock increases in value. So for every $100 I invest in this company, they will pay me $3 a year to hold onto the stock. I know you may be saying, $3? I can't even buy a coffee for $3. Yes, which is good, because unless you're in retirement, you should never spend your dividends. You should always reinvest your dividends back into your stock. Let's say you bought $100 per month of this stock and reinvested the dividends. At an annual growth rate of 10% over 30 years, you would end up with $266,444, of which you only contributed $36,000 of your own money. So you made a $230,000 profit. That's the power of compound interest. If you want to find out more about compound interest and how powerful it is, I made an entire video about it. So I'll link it above and I'll also link it in the description below. So after you watch this video, be sure to check that out. It's amazing. If you can get compound interest to start working for you and your money and multiplying it, it's magic. Albert Einstein called compound interest the 8th wonder of the world. He said, "He who understands it earns it, and he who doesn't pays it." This is why dividend investing can be so powerful. It takes advantage of compound interest. The first dividend stock on my list is TD Bank, ticker symbol TD. Toronto Dominion is one of the most dominant Canadian bank franchises. At the time of this recording, TD Bank is trading for $59.81 per share. They have a price to earnings ratio of 12.31, which is right in that sweet spot that we like to see it at, and a solid dividend yield of 3.93%. Analysts have TD Bank at a 69% buy rating. Morningstar has TD Bank at a fair value price of $61 per share. Their economic moat is wide, their uncertainty is high, and their stewardship is exemplary. TD Bank is the #1 card issuer in Canada. They've also established a strong presence in the US by having the most branches in the US among Canadian banks. They also have a 13.5% stake in Charles Schwab. TD Bank should remain one of the dominant Canadian banks for years to come. The second stock on my list is Valero, ticker symbol VLO. Valero engages in the manufacture and marketing of transportation fuel and petrochemical products. At the time of this recording, Valero is trading for $60.51 per share. They're not showing a PE ratio because they lost money last quarter. Their next earning call is on January 28th, so it should be interesting to see what their earnings were for the 4th quarter of 2020. Regardless, I think they'll be back in the positive in no time, especially once the vaccine gets distributed more and people start to get out of their house and travel. They have a great dividend yield of 6.59%, which makes this a very attractive stock for both income and recovery growth. Analysts have Valero at a 90% buy rating. Morningstar has Valero at a fair value of $79 per share. Their economic moat is narrow, their uncertainty is very high, and their stewardship is standard. Valero is positioned to thrive in almost any market environment thanks to its high quality refining assets and their location. The third stock on my list is Altria, ticker symbol MO. There may be a little bit of a moral dilemma with this one because Altria sells cigarettes, cigars, smokeless products, and wine. I'll leave it up to you to decide if that matters to you or not. At the time of this recording, Altria is trading for $41.19 per share. They have a price to earnings ratio of 106.37, which is higher than we'd like to see it at, but it doesn't necessarily mean that you shouldn't invest in it. They have an amazing dividend yield of 8.31%. This is an extremely high dividend yield. Altria is also a dividend king, which means they've increased their dividend for more than 50 consecutive years. They are only one of 29 companies that qualify for this exclusive title. Analysts have Altria at a 65% buy rating. Morningstar has Altria at a fair value of $54 per share, which shows that Altria could be undervalued right now. Their economic moat is wide, their uncertainty is medium, and their stewardship is poor. Relatively low capital requirements allow the company to return significant capital to the shareholders in the form of an 80% dividend payout ratio. Since you stuck around this long, Here's your bonus stock. The bonus stock is 3M, ticker symbol MMM. 3M is a technology company that manufactures industrial, safety, and consumer products. At the time of this recording, 3M is trading for $166.73 per share. They have a price to earnings ratio of 19.52, which is in that sweet spot that we talk about. They have a dividend yield of 3.53%, which is a solid dividend. 3M, like Altria, is also a dividend king, so they've both increased their dividend for more than 50 consecutive years. That's insane to me. Analysts have 3M at an 11% buy rating and a 78% hold rating. They believe that 3M will see some near-term headwinds, but I believe that 3M will push through because they've been putting a ton of money into their R&D department. That way they continue to innovate and stay ahead of their competitors. They are spending about 6% of their net sales on research and development. Morningstar has their fair value at $186 per share. Their economic moat is wide, their uncertainty is medium, and their stewardship is exemplary. I think 3M will do well in the long term, which bodes well for dividend investors who are looking to buy and hold for the long term as well. What are your favorite dividend stocks that you're investing in right now? Comment down below. If you like that video, I put another video right here that I think you will like. So click on that video and I'll see you in the next one.